Hello guys, welcome. This is Deepika from wealthandhealthmastery.com, and in today's video we are going to see different types of stocks. So there are different categories of stocks out there. You have growth stocks, value stocks, dividend stocks, IPO stocks, penny stocks, etc. So these are the different variety of stocks that are there to choose from. Now, depending upon what is your risk tolerance, and also are you looking to make money every quarter through the dividend stocks, or are you looking for increasing your capital, which is basically increasing your portfolio value. So depending on what your goal is, you can choose different kinds of stocks, and you can have a bundle of growth stocks along with value stocks, or bundle of growth stocks along with dividend stocks. So you can diversify your portfolio as well. So let's understand first of all what are these different types of stocks. So first of all is growth stocks. Growth stocks are the stocks from the companies expected to grow at an above average rate compared to other companies. So if you think that this particular company is going to grow faster as compared to the other companies in the market, then it makes it as a growth stock. So examples of growth stocks are Amazon, then you have Palantir is another growth stock. Tesla is a growing stock. So these are some of the companies that are in the growth stock. Usually the growth stock companies don't give you a dividend, because what they do is whatever money they're making, they reinvest in the same business to grow faster. So that is an example of growth stocks. The next one we have is value stocks. Value stocks are companies that are well established, have stable revenues and profits, and are built on a solid foundation of sales. They can also be a good dividend stocks. They often pay dividends and are seen as more stable investments. So if you are looking for companies which are more stable, where it's less volatile, then you go for value stocks. These are big established companies which usually also give you a dividend as well every quarter. So for example, companies like Coca-Cola, Johnson & Johnson, these are value stocks. Costco, these are value stocks. So the growth that is there will be comparatively less as compared to the growth stocks, but still they're going to give you a stable portfolio and less volatile, and also will sometimes give you a dividend as well. So those are considered as value stocks. The third one is the dividend stock. So these companies will pay you a dividend for holding the stock. So companies like Costco give you a dividend. Then you have Johnson & Johnson gives you a dividend. So these are the companies that are well established in the market, and they've been running for decades, and they are so stable. And at the end of every quarter, they pay you a dividend. Taiwan Semiconductor is another dividend stock which gives you a dividend as well. So these are dividend stocks. The next one we have is blue chip stocks. Blue chip stocks are stocks from large, well-established and financially sound companies with a history of reliable performance. For example, Microsoft. Microsoft is a blue chip company. Google is a blue chip company. Facebook is a blue chip company. So these are some of the well-established companies which are top of the companies that are producing revenues and are very stable, but they can be considered as a growth stock also, because Google is a growing company as well. Amazon is a growth stock also. So blue chip companies are well-established companies that have been running for decades. Pepsi is another one, Coca-Cola is another one. So these are certain companies that are there which are blue chip companies as well as value companies. The next one we have is the penny stocks. Stocks that are less than $5 are considered as penny stocks. These are more volatile stocks, so there is more risk associated with them, but there are also more reward associated with them also. That is called as penny stocks. So Sundial Growers, Nikola Corporation, all of these are considered as penny stocks. They can offer high rewards but come with high risk of loss as well. So those are considered as penny stocks. Last but not the least, we have international stocks and we have IPO stocks. International stocks are the stocks, if you are living in USA, the companies that are outside of USA are considered as international companies. So the stocks associated with them is called as international stocks. For example, I live in US, so companies like Alibaba, Wipro, Infosys, these are international stocks for me. Stocks of company based outside your home country is called as international stocks. And what they offer is diversification. Investing in international stocks can diversify your portfolio. So you're not only investing in American market, you are investing in outside markets as well. So for the diversification purposes, it is good to have a diversified portfolio so your risk get minimized. Currency risk is associated with international stock because there is currency exchange involved. These investments carry additional risk related to currency exchange rates and international economic conditions. So depending upon how the international economic conditions are, these stock prices will tend to fluctuate. So the examples, as I mentioned earlier, is Alibaba, then you have Wipro, Infosys. These are some of the international stocks that you have. Then comes the IPO stocks. Now, what are these IPO stocks? IPO stocks are shares of stock that a private company sells to the public for the first time through an initial public offering. That is called as an IPO. This process allows the company to become publicly traded and lists its share on a stock exchange such as New York Stock Exchange or NASDAQ. So basically, those are considered as IPO stocks. Now, what is the opportunity associated with them? They can offer the chance to invest in a company early. So you will be part of that growth from early on, and you'll be able to get that stock price cheaper. And then you'll see a lot of growth if you hold that stock for a longer period of time. IPOs can be volatile as the market determines the company's values. For example, of a IPO stock, Rivian Automotives. So that is an example of the private company that sells to the public for the first time through an IPO. That is called as an IPO stocks. These are the different categories of stocks out there. Now you can choose which type of stock you want to invest in. Sometimes people I've seen invest in growth stocks as well as dividend stocks. So they have a mix of both, and dividend stocks will offer them more stability as well as will give them a cash flow. So if you are an investor who is looking to make extra money as well, so then the option for you would be dividend stock. If you are looking to increase your portfolio value or increase your capital gains, then growth stocks will be the right option for you. But always having a mix of these different types of stocks will diversify your portfolio and will also reduce your risk. I hope you enjoyed today's video, and if you want to watch such kind of videos, do not forget to hit the like and the subscribe to the channel so you don't miss any video from the channel. I'll see you tomorrow with another stock video, so stay tuned for that, and thank you very much and have a wonderful rest of the day. Bye bye, take care.